information. What the? Who screwed on my charger? Okay. Hey, Matt, up 15? Unbelievable. No fucking things don't know how to go down. Where's the other thing here I wanted to, let's see. Maybe I gotta go like this. What's up, everybody? Man. Let's see, where is it? These are all today. Maybe it was yesterday. Maybe it was this. Yeah, this is it. So I can shut this. Where did I put the call close, by the way? Any little relief there? No, right? Because I don't think we had a fade all day. Let's see. Nah. All right. I think I'm good here. Let's move this here. All right. How's everybody doing? What's up, Mr. Struck? Struck feeling good about his red hot Rays and the ice cold Yanks. Seriously, right? Aim at up 15 is like being down. Well, up 20 now. Yeah, the Yankees turned into a pumpkin, that lineup, pretty quick. That lineup turned into a pumpkin pretty quick, Struck. All right. Let's get into it. It feels good. No, I don't have to wait on any earnings here and shit like that. As many of you know, noisy OPEX week this week, but it's been a fun OPEX week. A lot of you in the steam room can attest to that. There's been a lot of action in individual names, and you know it's tough as we talk about to trust a lot of the flow during OPEX week, especially in markets that have been rallying for a while, because you get these call positions that continue to build up and roll every month. So again, I'm just rehashing this because some people may be the first time on this webinar hearing it. But A lot of times you see size orders during OPEX week, and it's not new risk. Right, players or institutions are just replacing some of their positions that are set to expire. Okay, so again, you can look at it as that the player is still bullish, still wants exposure in the name, but that's not really what we look um, to get out of the flow, right? The sweeper activity, we're looking for aggressive risk, so it really is not our cup of tea. So that's kind of what we bump into during monthly OPEX weeks that presents a problem. Okay, but when you do get these active bullish weeks, because even though it's rolling, right, even though they're replacing existing positions, if it's done in an aggressive fashion and players see that type of action hit the tape during the day, it can help create momentum. And it's helped create a lot of momentum this week. For example, probably every single open this week, I think it stirred up last week, if I'm not mistaken, but you had NVIDIA where, they just come rapid fire Uzi-like fashion. NVIDIA call buyers, just one after the other, tripping over themselves right off the opening bell. And, you get kind of this rush of momentum, right? That you can get in the middle of, and make for some decent intraday scalps, right? Even better than scalps at times. A lot of these trades have been getting long in the tooth, especially the ones they're chasing. But we've also been seeing, names that maybe down on the day, and you see some sweeper activity, like a Tesla fades in the afternoon, a band of call buying comes in, creates some momentum. Even more so in the underbelly names that aren't as active as some of the mega cap names. Again, I'm just rattling symbols off the top of my head, like an NVTS. If they come in and you see 3, 4, 5 sweeps in that type of aggressive fashion, can create some nice momentum. So while the flow, you got to take with a grain of salt this week, right? Can't be trusted as any other week, especially the size. It certainly there's some edge to it for momentum purposes, right? So that's kind of what we've been focused on. The interesting part of it all that's been happening in this backdrop. Let's talk about the market, okay? Because if you remember, we were talking about last Thursday. We even talked about it on Sunday night for members. That this is a tricky market to handicap right now, as far as at the index level, right? Because you got this concentrated heat in semiconductors and selective quality, I guess you could say, AI pockets, right? They're so hot, so strong that you got everybody murmuring about a replay of 1999 and bubble talk. And at the same time, while that's been going on, over the last couple of weeks, the rest of the market, right, stuff that's more economically sensitive, cyclical, has been mostly in digestive mode, right? And again, we talk about this equal weight a lot because I think it's the cleaner read on the universe of the 500 stocks in the S&P 500. And you can see here, right? Healthy digestion over the last couple of weeks. So while that's been going on, you have this. Okay. And, what it does is you get these overheated sentiment readings and technical readings, and it all stems from these pockets, right? So I'll give you an example. Because the overall market as a whole has been actually digesting, right? some of the main big picture sentiment indicators we tend to follow and positioning indicators aren't as heated, nowhere near as heated, right? Quite the opposite in some of them, as you would think, based off, the noise out there. Let me show you one in particular we look at on this webinar, right? Is this today's? Yeah. I got to mute this guy. I forgot this guy. He snuck up on me. Hold on. He was sawing wood earlier. All right. So this is short-term sentiment comp. And again, it's more of a depiction on just the overall equity universe. Okay. And you can see we've cooled off here. Right? So you kind of had you had a little overheating here. And ever since then, the market, again, you look at the equal weight, stocks as a whole have been actually cooling off, digesting. And that's what you're seeing here. Right? But if you look at, let's say, in the options world, right? Because that's where especially a lot of retail gets involved. So most retail traders, they're not interested at this point in stocks that are dead wood and not doing anything, right? They're going to where all the hype and the momentum is at right now, right? And because these names are so expensive, you're talking about $500, $600, $700 stocks. A lot of these names, they're not buying equities, right? They're not buying shares. They're buying calls, right? Weekly front month calls. And that's where a lot of the heat is showing up, right? So you look at like a lot of these option measures, call option positioning. This is from Goldman. You could see pretty decent spike there. They're making the point that you can even sell an out-of-the-money call to fund most of a put spread if you were looking to put that on. Simple equity put the call readings. Again, the COVID rally, I remember quite vividly. You had it because that whole retail, remember we were giving money away. We were sending checks to retail to open Robinhood accounts. You had a low put the call for most that second half of that rally. Okay. So we're not quite there yet, but very similar, like we were talking about last week, very similar to what we were seeing in last year into that October high. Okay. It's just, this has got a completely different wrinkle. When I say very similar, I mean the option speculation, right? So some of the speculative sentiment parts that we're seeing, very similar readings to what we were seeing last October. But I think the main difference between the two is that you got a fundamental driver behind legitimate companies here. In last October, the bulk of that heat was all in speculative names, zero revenue stocks, quantum names, right? That just went ballistic. Okay. Again, here you got a complete re-rating in basically the whole semi-complex, the whole chip sector as a whole, right? Estimates, revisions, earnings are being revised dramatically higher, and these stocks are re-rating. Right, so there's fundamental reasoning behind it. It's not just speculative hype. But what you have now is you have speculative chasing of these names, especially from retail. Right? They don't want anything to do with anything else in the market because they're either losing money or it's dead money, and they've all crowded in the same stuff. Okay, so that's the backdrop we have right now. Now, here's the tricky part. Okay. If the entire market, if that was the takeaway from the entire market as a whole, so if we were seeing the bulk of stocks, right? Again, you look at breadth readings. I don't mean to jump around. I mean, have you seen the breadth out there? Goldman has been showing a chart, S&P 500 market breadth. We haven't seen a low reading like this since, I think it was COVID and the 2000, Like you literally see this type of breadth at market bottoms when the market's completely washed out. Right. So that's another thing here, right? You're not overbought in the market as a whole. Right. Breadth is not overcooked. As a matter of fact, you got oversold readings in some measures in some pockets of the market. All right. So what makes this really tricky to handicap is there are several scenarios in how this can play out. Okay. Most traders out there aren't looking at it that way. They're looking at it either if they're bullish, right? Or and a perma bull or whatever camp you want to throw them in. We're never going down ever again. We're mooning, quote unquote, right? And then you got the bearish crowd, which, oh, this is a replay of 2000, parabolic. It's not going to end well, and everything's going to crash, right? It's funny because I posted on Twitter, like you hear, oh, this feels exactly like 1999. And the person making that comment just started trading in COVID 2020, you know? So they have no idea what they're talking about. But anyway, so it's not that clean. Again, if the overall market was as crowded as the semis are, that'd be a different story. As a matter of fact, the prudent thing to do, and you probably hear me talking about it for the last couple of weeks, is to remain in cash and be patient. And whenever that wash shows up, it shows up. But that risk is not going anywhere because it's there. Okay. Here, again, the other scenarios, if you're wondering, here's a scenario for you, right? These hot pockets of the market do indeed run into some exhaustion and cool off. Okay. They sell off, but instead of taking the indexes down with it, money starts to rotate into the other areas that have been doing this over the past 2-3 weeks. Okay. If that happens, what are the major indexes going to look like? It's not a given they go lower, even with a lot of these names making up heavy weightings in some of these major indexes. I'll give you an example. We saw this in October, right? You had big parts of all the speculative names out there. I mean, they aggressively sold off, okay? And you had mega cap Mag 7 names, right? Microsoft, Oracle, they all got hit over the head. What the overall market do? It did this. Right? So that's the problem here is, again, do they rotate? Does that money rotate into everything else? Or do they still not have an interest in the stuff that's been consolidating here? Maybe you get a little bit of weakness, even though I don't think this weakness goes too far without attracting buyers, right? That's one scenario. One. The other scenario, and this would probably be the most annoying and frustrating for most people, is we continue to see this dispersion that we've been seeing for a while, right? We had a correction, so we kind of forgot about it. But before this Iran war, we were seeing a lot of it even in that tape, if you remember us complaining, okay? What do I mean by dispersion? You get this randomness where even within sectors, names are going they march to the beat of their own drum, right? So you have, instead of the semis all cooling off together, all selling off high correlation altogether, you get the DRAM names start to run out of gas, right? And they lose some of their sizzle, right? Then it starts to spill into isolated other semi names that have been rallying for a while. They start to get tired, right? So you get this randomness, but at the same time, there may be other chip names that have been more recently bought that are still strong and still pushing higher. Okay, because again, you have a strong fundamental backdrop in this group right now. Unless something gets in the middle of that and changes, even if there is a rinse, they're likely to attract buyers. These earnings have gone up dramatically. So again, that's just another scenario. So we'd be in a market where it'd be very random, quote unquote, stock pickers market. I think it would be a lot better, a lot easier to trade than some of these high dispersion tapes we've been in recently, because again, there are more names involved in a sense. But it'd be a stock pickers market, right? It'd be a stock pickers market and constant rotation, right? So you see one group doing well for a couple of days, then they kind of run into a brick wall. Another group starts to lead. Right? So you get that tape where the Dow's up one day, the Nasdaq's down, the Russell's up, the S&P's down. 2 days later, complete opposite. All right. So you can see how you can really get in trouble trying to handicap or make a big bet, a clean bet on the indexes in that type of tape. And that's certainly possible here. Certainly possible. So again, what do you do about that? You try to stay away from making that bet on the indexes, right? In other words, you try to find alpha in names. You try to find momentum in certain pockets and names. All right. And if the flow is accommodative, if we see aggressive sweeper activity showing up in certain areas, certain pockets, certain select names, right, that makes our job a lot easier because it points us in certain directions in what names and what groups may be seeing rotation and momentum. Right. So I think that's the prudent approach, right? We kind of talked about this last week as well. As we wait and see how this resolves. Okay. And here's the question that I'm looking at. So you guys get an idea of what I'm looking at. Because what I see, obviously the semis, you guys know, most of you know me by now, right? The semis that's not where I'm looking right now, right? They're extremely crowded. They're up a lot. That's not my cup of tea, right? That stuff, I think, I want to trade mostly even intraday. That's the extent of it. And if anything, I need new names to show up in these areas, right, for me to have an interest. But where I'm looking now and where we've started to see some flow, we talked about this last week, if you remember. I think it was last week, could have been even 2 weeks ago, is this part of the market. Do we get some clues? Do we start to see some early signs of positioning in even parts of the other parts of the market, the more cyclical parts of the market? Okay. And again, it doesn't have to be, it may not be everything at once. In other words, they may not buy all the cyclicals together, right? They may not buy the financials, the metals, healthcare, all at the same time, right? Maybe they start buying a particular group initially, and then eventually spills over into some of the other areas. But that's where I'm looking for as far as positioning is concerned, right? That's where I have an interest. One area that looks pretty interesting that we've been seeing flow on, I've actually bought a couple of ETFs there, is copper, right? And you remember we were talking about this for the past couple of weeks, Freeport, FCX, and stuff like that. Okay. So what happened this week is you actually got a copper breakout. Right? Now, again, is this, and we'll talk about this as well, because this is the interesting part of the market, the part of this market right now. Like my feeling right now, with everything we've seen to this point, this rally over the past 2, 3 weeks is not even really risk on. It's more of a defensive rally. It's a rally focused on the only part of the economy really that has any growth. Right? It's not like they're not making a bet on the economy. They're just making a bet on a particular group. Okay? And that's where I think, again, if that tone changes, if you see, if they have any excuse to start to start making bets on the macro, you got a lot of money on the sidelines. You got a lot of hot money in tech that could use a rest, that can pour into many of these pockets of the market. And nobody's in them. Nobody is in these things. Nobody's in them. All right. You look at macro funds, macro related funds. We've looked at it, right? You guys in the steam room know they have no exposure. Zippo. Again, for good reason, right? They're not just gonna, they don't buy, they're not gonna buy because they have just based off FOMO, right? They're strictly buying if they see a light at the end of the tunnel as far as the macro is concerned, right? Is the Fed going to be cutting rates? Right? Is there any stimulus or any excitable growth out there? Right? Now you got at best a resilient economy with a hot tech pocket of the market and economy, and that's where all the growth is. Housing is abysmal, right? You even got quite the opposite. You got rates that have been rising, and even some fears about inflation, which again, I don't think the Fed's going to raise, but it prevents them from cutting, that's for sure. Okay, but if that changes, all that money has to start positioning in these things. And that's why I think it makes sense to start looking at some of these areas now, especially if we see flow, for some clues, right? So copper, and I mentioned copper in particular, again, this is just my feeling. It's not a macro bet, right? So you probably heard the term Dr. Copper, right? Usually it's a gauge on global economic growth. Like when you see copper strengthening, right? That's an indication of solid global growth. But I think this is more of the AI build out play that's spilling over into this. Right? So now people are looking at this area of the market as, okay, you have kind of the cherry on top, which is if this macro backdrop ever improves, if the Fed ever gets the chance to start easing again, right? That was October, let's say. That's where you want to buy copper and stuff like that. But even without that, you got this huge AI build out, right? Which copper is certainly in demand, that would keep these things bid. So we started to see sweeper activity in names like Freeport. Well, Freeport's been the name. That's the name they come after when they want to make a play on copper. Right? So we've seen a good week and change of buying in Freeport. Southern Copper caught some flow. I think Tech, which is zinc and copper, caught some flow. Okay, they all look similar. The ETF plays on the group, and this is what I played, is COPX and COPJ. Okay, now, I got to remind myself of this too. We got to remind ourselves that, listen, if it turns into what's going on in the semis or what happened to gold, right? If copper is the next thing to go bananas again, so be it. But initially, we got to look at it as it's not, nothing's like the semis. They're kind of on an island by themselves. You understand? And, you know, dips are where the opportunity likely going to be in these things. You know, if they break out and rip, so be it. Right? You're going to be in it. You have some, but at the same time, we don't want to get stupid and sloppy and act like these are going to be trade like chip stocks and chase them higher. Right? And I think that applies to everything else. Everything else. Everything else on this side of the market, right? Because I think, again, the upside is going to be tricky while we're still in Iran. If the Iran news gets worse, right, these things probably will be under pressure. But that's where the best entries are going to come from, right? And it may even give us a little bit of time to position in some of this stuff, as opposed to just looking to buy something, you buy a little and it just jets away from you. Okay, but again, from a positioning aspect of things, this is where nobody is at. Okay, the hot stuff is where everybody is at. Okay, that's where, of course, if you're trading intraday, especially, that's where the momentum's at. That's where you want to scalp. That's where you want quick trades, the whole 9 yards. But it's extremely crowded. It's extremely crowded. You know, this stuff from a risk reward perspective is much better set up. Now, again, there's risk, obviously, but again, from a risk reward point of view, much more appealing. Okay. So again, and that's where, you know, we're hopefully, and this week again, we had earnings and you had this OPEX week, which kind of skews flow a bit. So we really haven't had a chance to get a decent measure on the flow, right? Like if the flow looks anything like it's looked this week or last couple of weeks through earnings over the next several weeks, we're going to have a lot of fun in the steam room. Okay. Chances are it's not going to look like that, but if it's 1/4 of that, it still will be extremely fun. Right? But that's where we want to look for clues out of the flow, right? See what names they're hitting up, see what names they're positioning in. Try to put pieces of the puzzle together, and maybe we get some early clues, early signs to where this hot money could be gradually moving towards. Silver and gold has also seen some interest of recent. Okay, I know silver has been the hotter play. Again, I think more because it's ties to AI, right? The AI build out and all. But we also saw some gold miners, I should say, right? Gold miners have seen some flow as well. Okay, but same thing. Like it's weird. I agree, but you see, right? You have any negative Iran news. You got pressure on these groups. You know, as of right now, that could change. You had some dollar strength today that put pressure on these groups. All right, but we're starting to see some buying here. HYMC, I think I mentioned this to you last week. We saw a decent sweep in this name. Has been in consolidation here recently. A silver name they've been buying for a few weeks now. AG. They started buying when the market was actually in correction, so they've been at it for a while. They continue to buy this name off dips. AG. All right. So again, it's early and we're seeing some early signs. This is where some of the stuff's showing up. Industrials, I was talking about this in the room today. Obviously I like copper. I have some exposure there. The copper miners. I also like the industrials. I like the industrials. I like the industrials. I want to make a play on the industrial, very similar to I made on small caps. Very similar to I made on small caps. And I'm still holding IWM. I'm not getting out of that. That obviously I put a ring on a finger. But industrials, I kind of want to make a similar play on. Again, the question for me is this simple. Okay. Does this little bit of heat that we get create some selling where they don't rotate initially, right? Maybe you get a week or two of selling. Oh my God. Maybe you get a week or two of selling. And I think this part of the market that I'm talking about here is going to be really nicely set up. Obviously, the other parts of the market that have been ripping and roaring, who knows where they pull back? Who knows if they pull back? Again, it's no man's land. I'm not even going to pretend to know what any of these chip stocks may do. But groups like this, if you get, or even just some digestion here, it doesn't even have to be that weak, right? You just kind of get a choppy little range-bound market where you can take advantage of some short, quick dips and position accordingly. But the industrial as a whole, that's the Dow, by the way. But a cleaner play, even on the industrials, would be XLI. Okay, but I think you even want some of the laggards in there, because like kind of the feedback I've been getting from some of you is like, some of the stronger industrial plays. I get it, but if you kind of get this rotation to cyclical value, some of those stronger plays may digest themselves. They may digest with some of the other AI names. At some point, it's the inevitable. Okay, to just breaking news here, tech is going to go through some sort of digestion. Okay, at some point it's happening. And when that happens, that's where I think, even if it's not immediately, that's where I think some of that money is going to start looking at these other areas. Again, very similar to last year, guys. Very similar to, for those of you around, right? Very similar to what we were talking about on this webinar in October. The only difference was, if you remember, you guys remember, I was really spooked by those spec names. Even if they went higher, I didn't care. Like there was way too much risk there. Here, again, it's different. It's different. It's different. You got a big fundamental shift there. It's different. Okay? And that's it. And then again, the other easier approach, instead of, if you don't want to cloud your mind with too much shit these days, I don't blame you. And you're in the steam room, it's just take things on a name by name basis. I mean, that's kind of where I'm at. If you see some aggressive order flow coming in, clean activity coming in, and the name looks interesting to you, you buy some. And again, that might be the best approach of it all, because if you're looking kind of at these big picture bets or even sector wide bets, and you get this more dispersion type tape, it gets really frustrating if you don't have the patience. It gets really frustrating. All right. So, I mean, that's kind of, again, how I'm seeing things from both signal perspective, positioning, sentiment, and flow. And again, we're going to start to get even more information from the flow, right? If you guys remember me telling you, you had the heart of earnings season, and that's when flow starts to clear up. Well, we ran right into OPEX, but we're going to start to see flow clear up here. You know, we're going to start to see flow clear up here. And we got NVIDIA next week too, by the way. NVIDIA earnings. All right. Quickly, before we talk about some names, let's look at some of these things, right? Signal-wise. Credit spreads, kind of the indicator we like to look at. Again, nothing doesn't really look all that different, right? In other words, it's confirming basically what the market has been doing. You got, again, depending on which spreads you look at, you had a little bit of a lag where you kind of had this chop and the indexes kept going. But remember, we looked at this last week. If you look at like RSP, I mean, it's perfectly in sync, right? And you could even make the case that spreads, where am I? Have outperformed that recently here. Okay, so no real takeaway from credit, basically just confirming what we've been seeing. Here's implied correlation. This has been signaling to us that we're going to have this dispersion until we get a rinse. You're going to have this dispersion just linger here. And again, that's, it's normal. Earnings season, you get that a lot, especially when the mega caps are reporting and stuff like that. So it's not an unusual thing, but you're approaching that area, as we like to call it, landmine territory, where the market likes to rinse, right? And that's what you're seeing, that green line. Okay, every time you get to that area, you get like quick little rinse in the indexes. All right, here in 2024, you had a bit of an overshoot, but you kind of paid for it here, right? Here, same thing, and that led to the correction. And here, just little minor shakeouts. Okay, so again, this randomness to the tape will likely continue until we get a rinse. Let me see, what other indicators here? Here's breadth, by the way, breadth and internals. Okay, again, if this market as a whole was cooked, like we've seen in the past, you would see red all over this thing, all over the place. You got green popping up here. Consumer discretionary, green. Utilities, green. Financials. I mean, have you seen the financials? They've been awful over the last couple of weeks. Oh. Here are the financials. Again, I say awful. Honestly, that's what I thought the overall market was going to do. Okay? When you remember that conversation we had where, the credit signals and stuff like that were pointing towards bullish momentum for a couple of weeks when we were talking about that before the ceasefire. This is, if I had to draw it up, this is what I thought we may see. Something like this. But the semis, and here's the thing with the semis in tech, they're benefiting, they're probably benefiting from this war right now. So if you get good news out of this Iran shit, excuse my French, that may be a catalyst to sell the semis and rotate into everything else, right? Because the more the Strait of Hormuz is shut down and the more of these supply chains are bottlenecked and shortages and everything else, that's been feeding into the semi play. All right. But again, financials, are far from overheated. Where am I? Even the industrials. Okay, so that's breadth and internals. This is another little cautionary sign, if you want to put it in that camp. This is Goldman's risk appetite indicator. and you got a reading over that one level, which usually don't bode well for overall market returns before you get a rinse. Like usually you get a rinse before the market does anything spectacular. Now, even Goldman's saying this go around's a little different because again, it's concentrated heat that's causing this. So, in other words, that may be at risk. But again, it's not certainly not bullish. Okay. Oh, yeah. Equity market returns slowed down once RAI and equity momentum turned very elevated. Slow down. So that's the better way to put it. But again, we know where the risk appetite is, right? We know where that risk appetite is concentrated in. AAII, again, just right. Everybody knows it. Survey, weekly survey. Bulls. You would think all this bubble, but bulls are decreasing, not increasing. They're going in reverse. So investors aren't feeling all that great about things, right? It's speculative traders. That's where the heat is. Pure speculative traders. That's short-term sentiment, stuff like that. That's been hot for a couple weeks now because of the S&P 500. Let me go to indicators. Hold on a second. I'm in indicators? Oh, I'm in indicators. Hold on. Where's some of the others? Here's the things I wanted to show you, guys. Hold on. Oh, here. So kind of the macro funds, right? This is, again, Goldman funding spreads. So think of it as the macro funds and leverage. Okay. When they're feeling good about the macro backdrop, right? We talked about this. You remember me explaining this. The black line, that means they're adding leverage. Okay. When the line's going south, that means they're taking chips off the table. All right. So you see here, right, as the market was making highs here, topping out, you see how they started to take chips off the table, right? You got the market pullback. Now look, you get this slingshot rally in the S&P 500, and look what they've done. Absolutely nothing. They've done nothing. Nothing. Okay, because again, the macro backdrop, right, is just not set up for them. They're not going to get FOMO off the semis going bananas and pushing the S&P 500 higher, right? Because that's not their type of trade. Whoop. So again, this would be definitely a negative sign in most cases. For me, I don't see it I see it as a positive. You know why I see it as a bullish thing? And maybe this is the perma bull in me, but whatever. I see it as if there's any excuse for them to get long the macro side of this market, they're going to get really aggressive. Right? So my point is, they got a lot of ammo to fire whenever that time shows up. And you get something like this. All right? So that's, again, I know, October, I think we've seen the start of it. This Iran war put a brick wall in front of it. And now it's a matter of, does it reignite again? But if for whatever reason Trump finally gets out of Iran, oil comes in, rates come in, and these guys start to ante up, whoo, you got a lot of meat and potatoes on that trade. A lot of meat and potatoes. Now, what's tech doing that? I don't think it falls apart, but it probably, again, what we saw in October, probably lags. Parts of it. Here's retail call. Here's where all the heat is, guys. This is where all the heat is. That's why, honestly, you get a decent rinse for a week and you fry all these guys because they're all in weeklies and front month. You get chop. If you just get chop, you fry these guys. But this is where all the heat is. They're not buying shares in SanDisk. They're not buying 10 shares of SanDisk at $1,382. Right? They're slinging calls. They're slinging calls. That's where the heat's at. Here's another look at risk appetite. Pushed a little bit higher this week. This was last week. But this is stretched out here. So you can see. Here's another look. This is a bit delayed. It might be even higher. So this was the October highs. This is where we are. This is one of my favorite option sentiment signals. Measures net opening bullish strategies. Why was I so cautious in October and all that speculative stuff? That was why. Here's DB's big picture indicator. Yeah, kind of in no man's land a bit here. And what else? Here's another indicator from Sentiment Trader. Retail bought to open, put the call. A very clean put the call reading from retail. This was into the lows, right? Where we figured we see some sort of relief, some sort of bounce. Obviously nothing like we got. And you can see this has receded a decent way. Anything else? Here's the panic index. Again, this was lingering up here. If you remember us looking at it into the correction, and that has washed out nicely, but obviously could go even lower. And here's Goldman's positioning indicator. Oh, and finally here. Hedge funds. This is the last week. Wait, I don't think, is this updated? What's the date on here? 5/10. What's today? Yeah, right? So hedge funds over the past week and past month, blue is week, black is month. Single stocks For the past month, the past 20 trading days, they've been net sellers. Sellers. They did some buying in utilities last week. That's it. They shorted energy and industrials. And industrials over the past month. Believe it or not, they were actually buying up the industrials into the highs, and then they flipped here recently. Consumer discretionary, that's got to be the most hated group on the street right now. Because again, consumer, higher rates, housing, a debacle, prices of shit going up. There was another chart here. Hold on. Oh, it's not going to come up like that, is it? Let me see. What's the date on here? 5/10. Perfect. This here. This is hedge fund net exposure. Single stocks, blue, and macro products, indexes and ETF in the light blue, or whatever the hell color that is. All right. And it's a popular pair trade too. Long, whatever, strong AI semi, short, have your pick. Very popular pair trade. All right. So that's the setup. In the overall market. And again, I think the easy approach here, take it on a name by name basis, especially if you're in the steam room. Just again, anything I'm highlighting as clean, aggressive buying, you like the name, you like the spot, fire. But just again, you gotta have a little bit of common sense and be careful. If a name's been running for 2 straight months up in a straight line, know your risk. Okay. So what some of the stuff I've been playing, so you just get an idea of what we've been seeing flow wise. A couple interesting names actually, and we're starting to see. If you guys remember us talking on this webinar for a while, what my bread and butter, what I enjoy trading and what I do best in are those underbelly growth profitable names, right? Like, again, they're not, I play speculative names, don't get me wrong, right? I play anything, but I think, especially when it comes to the sweeper activity, the golden goose, the best of it all is, at least what I come in every day hoping for, is you start to get sweeper buying in an under the radar name, under the hood type name. And when you look at the name and you see they are profitable and they got some nice growth, usually it's something to get really excited about, right? So if you remember last Thursday, we were talking about this guy. And thankfully, see, that's why I like talking to you guys, because during the day, I'm all swamped with flow. But this was a name we looked at together last Thursday. And when we looked at it a little bit further, I just, even being up off of earnings where it was, I had to buy it. And the reason why I had to buy it, it caught good-looking sweeper activity in a name that doesn't catch sweeper activity. And when you pull up the numbers, the company's trading at 12 times earnings. with really nice growth, right? So, and you can see again, it's almost like a re-rating in a lot of these things, right? I mean, you can't have a stock making money and seeing that type of growth. It's only a matter of time before it gets street recognition. And that's where sweepers come in, right? The sweepers are queuing us up that the street's starting, somebody sees what we see. Momentum is coming in this direction. Okay, so this has had a nice move. Probably heads higher. I'm sure it pulls back at some point or digest at some point. I have no idea when these things get up in this neck of the woods. I have no clue. Okay, but again, these type of names, I'm making the point, these type of names are kind of what we want to see, and we've been seeing some of. This name here, another interesting name, if I can remember the symbol, FPS, many of you are aware of it. The recent IPO, I think it was Goldman IPO. They're in that power sector of the market, which is on fire. And again, stock just came public, 30s, catches decent sweeper activity. They report and knocked the cover off the ball. Doubled revenue, doubled earnings, and looks good. Okay. Another name I bought today, AMRC. AMRC. I don't know what the hell they do. They're I sound like what that guy on CNBC. Oh, interesting name. What do they do? What? I can't hear you. The signal's bad. What'd you say? Yeah, I can't make out what you're saying. You guys know what I'm talking about, right? But yeah, this is in the same arena: energy, efficiency, infrastructure, blah 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 blah. But look at the action this thing caught today. Oh, all right. They could be, like I said in the room, they could be shoveling dog shit, and I'd buy it. Why? Is this the action yet? Here's what they bought today. 10,000 October 35s. Almost 3,000 June 35s. Now, you remember me telling you, right? I just gave you the whole rant again, the whole spiel. What sucks about this week is you see buying like this, and it's likely May exposure getting pushed out. Right? It's not new risk, so you can't get that excited about it. Okay? If this was new risk, new buying, then yeah, something to get excited about. Well, lo and behold, AMRC has no open interest. There hasn't been a call buyer in the name yet. Here are the top open interest positions. 300 October puts, 300 July calls. Total open interest, everything, 2,600 contracts. Total. Okay? What we saw today, we saw basically all of open interest be bought right in front of our eyes. Right? See, and this is the beauty, like when you start seeing these things, this is how, like when you say, oh, it's rolling, The reason why a lot of times, like I'll know it's rolling or not rolling, is when we first start to see action in the name, it shows up like this. So, like for example, Rocket Labs, when it was $4 or whatever it was. Many of you remember that, right? In the Steam Room. When it caught action, there wasn't a whole lot of open interest there. Basically, all the buying made up all of open interest. So we knew where all those positions came from. Now you look at Rocket Labs, they buy that thing up every day and roll every day. Every day there's action in there. Okay, but the beauty of finding initial activity like in this name, you know it's clean action, right? Whether it works out or not, again, is irrelevant. Now, I say irrelevant because I know from my experience, if I play all names like this, I'm going to knock the cover off the ball. You know what I mean? I'm going to win a hell of a lot more than I lose. So that's not even the thought that goes in my mind. It's about clean action. Is the buying clean or not? Or maybe I don't know. You know, that becomes the problem. But with this, we know. What, right? What else could it be? So why is somebody today coming in and doing all this noise? I don't know. But we'll probably find out. Okay, so I bought some of that today. I also left some room to buy if there's a pullback in the name, you know. Looks like it's printing after hours 34.70. Is that possible? All right. Look at this. Why is that? Is there news? Why is this thing up $1.40 in the after hours? Just because? What is this shit on my screen? How do I get this off? Oh, it's gone. Never mind. But yeah, so it's this stuff, you know, again, those of you in the Steam Room, if we see action like this, it really solves all our problems. You don't have to get too wrapped up in handicapping the overall market. Don't get me wrong. If we get to a point where we are overheated as a whole, the market's crowded as a whole, or we see credit falling apart or anything like that major, obviously we're going to, pay attention to that. Okay. But when I'm talking about getting into this random dispersion type tape, when you're seeing aggressive buying in names, it makes things a lot easier, right? Because it can kind of guide us to where we want to be. All right. So hopefully, again, we continue to see action like this, whether it be in large caps, small caps, who cares? All right. There's $1 in the after hours, you mean? Yeah, I don't know. I mean, did trades go off here? This might be just a trading view thing, I don't know. Could be a trading view thing there. Anyway, stock looks good. Okay. I see you guys talking about some of the names here. Nokia has been out of control. It's the buying in Nokia has been silly. It really has been silly. Like I'm talking about all year. This name has caught action literally every day. Now, there's rolling now, obviously, because it's had a nice move. So not all the flow is new buying, but it's active every day. Every day. Every day. You're starting to hear, again, murmurs, chatter of the reason why, right? But really nice move. A couple of that was the good thing about kind of what happened this earnings season. If you remember, we talked about this a couple of weeks ago. The speculative names, maybe it spills over into the spec names, and it has. So it's made trading a lot more fun during earnings season. Poet, I know quite a few of you have at least traded this name, right? What a move. What a move. And you know what's funny? I don't remember the news, but I remember it sold off. And because I played it here, because they came after it here again. Ooh. And I like the spot, you know? So that was like a gift. And look at this. Another crazy spec name that's seen a lot of action. Again, I think quite a few of you in the Steam Room have played it. They're calling it Baby BE Fuel Cell. Look at that. Oh. So a lot of this stuff I've been trading for the most part intraday. Some might give an extra day to see, what can I get this off? To see some follow through. But you know, there's been a lot of momentum in these things. A lot of momentum. This name had a nice move this week. I think Sahil, you were playing this, right? Had a nice pop. That's been active. I mean, especially these power names, it really has spilled over into the more speculative names like QS. That's been active this week. OSS, there was a couple sweeps in that name, I remember. One Stop Systems. Some really nice moves. That's my baby BE. Struck, which one did I pump? Oh, the AMRC. AMRC I pumped. The old WSJ pump. RXT, I know. I don't know why I didn't play this name. You know what happened? You had earnings that got in the way of it. Earnings got in the way of it. This had a lot of action too, this RXT. You know? So again, these names, these type of names, obviously these are more speculative, right? You know, you're not talking about quality, you're not talking about what's going on in the semi-complex right now and stuff like that. Like, these names are losing money, heavily shorted. So, you want to be a little more careful in these things, but again, they can rip, They can rip. I pumped FPS. I wish I had that much power. What do you think I am, Donald Trump? So yeah, there's been, again, for a thin market, there's been a decent action. Let me show you that breadth chart. I posted it. Can I find it in the room? Let me see if I can. I don't think. Oh, I didn't tag it. But let me show you. It's a pretty funny chart. Let's see. I probably could have just found it off my thing there and posted it, but it might be easier here. Hold on. Should be over here somewhere. Hold on. Oh, is that it? No. Yep. Look at that. Like, you see this at market bottoms. It's a weird market. It's a weird market. Baby Donald. And who knows, maybe some resolution in the Middle East finally gets some of that real rotation. Again, I don't, you got to understand, Bears are, and that's fueling even the upside, right? You got, especially even the retail guys too, trying to short these things. They get squeezed, and it adds, pours gasoline on the fire. But at some point, it's going to get tired, and I think they're going to lag. I think they're gonna lag. And if you're playing options, right? If you're swinging option positions, it's just as good as a crash, right? If you're buying Micron 2 weeks out and the stock chops around, you're losing your money the same way as if the stock crashed. And that's what's going to get the retail frenzy. That's what's going to get them eventually. Oh, where am I here? I lost my place here. CTAs, you really got nothing going on there. There's been a little bit of SPX. Hold on. Here. So this was the flows coming into this week. Flat tape. Forget about this. This is globally. So you're looking in the parentheses here. Flat tape, 74 million buyer. That's peanuts. It's a non-event. Up tape, peanuts. Up tape, they actually sell a little bit. Down tape, they actually buy a little bit. So nothing. They're not. It's not big. They're not big players here. They're not big players here. Okay, where the problem lies is if this market rolls over, if it rolls over the next month, you got a lot of systematic supply. That's going to come out quickly. That's the risk. That's the risk there. So, and this is what they look like exposure-wise globally. Here is in U.S. And by the way, Sharpies too. Look at this. They're like the macro funds. Same thing. Nothing. Look. Now again, I got a buddy of mine who makes a bullish argument here. Where are they? And says they're not hedging into this type of strength. And he feels that's really bullish. I guess. I don't know. But I just think it's, look at it. They're exactly flat. Combined in U.S. And equity index futures. Combined. Oh, home builders, again, that is probably the worst sector on the board right now. Home builders. And reason being is because of rates. Right? So here's the problem with home builders. Right? So this is the 30-year yield and the 10-year. Okay? Again, this trade went from looking probably the best on the board. That Iran conflict flipped it on its face. This Iran predicament going on for a lot longer than people expected created a problem. Now, maybe it's just a short-term setback, very possible, but it's, you can't blame them for not buying housing-related stuff here. Like, have you seen Home Depot? Look at this. Okay? This is Home Depot, my friends. You got the S&P 500 breaking new highs, bubble talk, and Home Depot is in the toilet. In the toilet. But, again, if you get a resolution, forget a resolution. If you get whatever news that gets oil to come in, rates to come in, and rate cuts back on the table, you're going to see a strong bid in this stuff. You know, you're going to see this. You're going to see this stuff come back hard. But until then, it can't get out of its own way. So it's tough here now, right? Because it's a timing issue. It's tough. Like, you were on the verge of breakout here. And then that Iran war. Again, it wasn't the Iran bombing. It was that, he got stuck there. Right? He got stuck there. So, again, this is not apocalyptic. Just like it should, it gave back that breakout game, right? It comes right back to the bottom of the range here, where it belongs. So you get that mess clear up, and you're going to test highs here again. So it's a timing thing. Do you like? I told you guys. I was being honest with you guys. This nail, I'm still holding. Okay, we talked about it today. I was up $30, $30 on this stupid nail, and I didn't sell it. And the reason I didn't sell it is because I don't own enough of it. You understand? I wanted to add to it. You guys remember? So I was looking for a pullback to add. The problem is this pullback changed the story with it. So I'm still holding it. I want to add to it. I just haven't added yet. But you got to understand too, what I did was a no-no. You don't hold levered ETFs. I'm a jackass. You know what I mean? But just so you guys know, for your reference, these things are not meant to be held over the long term. What I like to do with these things, like I did with IWM, I buy TNA when I think I got the timing down pat. You understand? When I think I got decent timing on it, I like to get in the levered ETF, right? Usually I add to it. In other words, I don't buy it all in one shot. If there's a dip, I'll add to it. And then if I catch the move, I sell it and I flip it into, like I did IWM calls, and hold on to that and roll that. So the reason I say that is if you go into a correction, these things, they're levered. So they're going to come down twice as much or whatever they're levered. And then when they bounce, because percentage-wise, it's cheaper now, they don't go up the same. You understand? So they're not meant to be held over the long term, these things. But yeah, this, like all the other parts of the market, I'm interested in. I just, I'm not going to buy it just to buy it because it's down. And again, hopefully we see some flow. Home builders don't catch a lot of flow to begin with. We saw a little bit of flow like Pulte and stuff like that. But hopefully we see some flow in these things show up. It'd be nice if they show up down here at some point. But bigger picture, again, as bad as the housing market may be, I think it's fine. For now, I think it's fine. So yeah, I'm still interested, but I haven't taken the bait yet. And IWM, I'm not going to add up here. I'm not adding IWM. Liquidity, again, I'm no liquidity expert. I rely on other sources. Liquidity saw a little bit of a bump over the last couple of weeks. According to the liquidity bros, it's likely it's going to be short lived. I think the Treasury did something to boost the liquidity. So liquidity still, as far as Bitcoin is concerned, again, from who I follow, is not all that promising. But again, that can change as well. That can change as well, depending on the environment. That's what it comes down to. Listen, again, I'm talking from market. I'm not talking about from real life stuff, right? The Iran war is a shit show, but I'm talking like the Iran war or the threat of Iran war was a good thing for stocks. If you remember what we were talking about when it showed up, the cyclicals were on fire. They needed to cool off anyway, right? You remember names. Oh, look at that chart. Remember the rip in Freeport? Look, right? So this, let me get this off of here a second. This needed to happen anyway. But what happened was this Iran war was more extended than a lot of people were hoping for. And some of these sectors are affected, both good and bad. Chips, good. Rate sensitive plays, bad. So liquidity from the couple of sources I follow, again, a bump up the last couple of weeks, but they don't think it's a longer term thing. They think liquidity has seen its highs last October, and from the information at hand, net heading lower, not at an aggressive rate, but heading lower unless they do something about it. Unless something gets done about it. So again, for Bitcoin purposes, that's the main thing there. Liquidity, it's been a lot more sluggish than. I mean, listen, guys, it's been all AI chips. Like that's where a lot of the excitement has been for the most part. Everything else, it's like these little AI pockets. Again, that's what the liquidity bros are. Their reasoning behind Bitcoin being sluggish. But, that may not be a bad thing. Because, again, like, here's what I was thinking. And I'm not, I don't follow Bitcoin that closely. But something like this, right? Because after this type of move, that's what was needed. So maybe you get, in other words, maybe you get this now. Kind of chop and fill here before later in the year, maybe you get a ramp. Again, I'm just going based off, you had this big move, everybody piles in, shake them out, you got to wear them out. And it's more time than anything else, right? And you had very similar here and back here. This was a longer one. So I don't think it'd be the worst thing in the world if this thing hung around in something like this here. I think that would be the best thing. But again, as far as the dynamics of Bitcoin, I'm clueless, right? I'm lucky I can turn my computer on and off these days. So I'm just talking about from price action perspective and sentiment. What do I make about trade alert news? I'm pissed off. I don't like, well, where Joe, you guys know Joe, he's CEO now of the Steam Room, big shot. But he claims we're going to have a solution, kind of our own thing, which would be huge because I don't know what I would do. You know, I don't know. I'm being honest. Like I've been using Trade Alert forever, and anything else I've used doesn't even come close. This is like it's like my pet dying or something. You know? Yeah. See, Mario was saying we're gonna have our own flow. I hope so. You know, I hope so. In the meantime, you know, I'm looking and asking around, but I don't have high hopes there. So try not to think about it too much and bring myself down. But yeah, Cash, I was kind of surprised by it. We should buy them out, right? Oh man, I didn't even think of that part. Trade alerts, ceasing operation. The CBOE, you didn't see they're laying off people, they're getting rid of shit. I don't know why. They're cutting fat. Look at the stock. They don't have enough money. Look at this thing. Yeah, man. I can't believe it. It's annoying. You know, and I'm so used to it. Tough times, huh? It looks like tough times. What else, guys? Again, you know, and there's just, you got other parts of the market that have been just super strong and they're relentless, like the quality parts. Look at Nucor, steel. Remember we were talking about these steel names? Look at these things. Remember Steel Dynamics? The breakout here? Look at this. That was the first cyclical they swept, if you remember October. Right over here. Bink, breakout. Look at this. Crazy. Alcoa has been seeing some more buying. AA. That actually looks pretty good, Alcoa. The choo-choo trains, they look really good. UNP, remember we talked about them? CSX. Yeah, again, these aren't the sexiest names out there, but if you play them, there was some buying into the highs here. JB Hunt, another tranny. Look at that. You know, and these are all real big time names, big time revenue, big time profits. And you know, the one thing I'm and liquidity has something to do with it, but the one thing I'm trying to avoid because I can fall into that trap, you know, some of the speculative stuff I'm trying not to fall in love with. You know what I mean? I want to just be more tactical with it. Like if they're making money, they're profitable, and you know all that. That's fine. Um, but you know these short squeezes and the more speculative stuff can come and go if liquidity is not there. But you know, there have been quite a few of them. You know what? Two names that we were talking about this today in the room. Two names that caught really nice action, but they literally caught action near the end of that blow off top in October. SGHC. You guys may remember it. Okay. This they actually bought before October, had a nice push, and then came down with everything else. But look at it, right back again. And they had Mays. We'll see if they roll them, but they kept rolling and rolling and rolling and rolling down. And the other one's this guy, AUR. And look at this one come right back. But, again, you need a lot of patience, right? Because here's where they were buying, right? And then here's that correction in October, hung out down there, and then higher. But they bought with time, and they rolled. So, if you believe in the name, that's what you got to do. But I didn't hold either of them. I was contemplating holding this one, but I didn't. I had equity in both. And that's it. Anybody have any questions or anything else? Any names or action or anything else you guys been seeing? Oh, the other thing we didn't even talk about today was volatility, right? So you kind of getting this little bit of vol up, spot up, as they say, type tape, where when the NASDAQ names kind of get into a frenzy, you see VIX and VVIX trade up with the stocks. But that's all based off the call activity in those names. Again, it's a weird market. It's a weird market because if you look at the overall market as a whole, it just looks a lot more constructive, a lot healthier. Positioning so much cleaner. You just have this, which is, this is a big piece, right? Because it heavily weighted in the indexes and everything else. And then you got, just those quality AI names that they keep buying pullbacks in, right? Like these guys. We've been talking about these names forever, it feels like. CRDO, CLS. But these are quality names. These are studs. They've been going up for a long time. That's all. But look, you had this big rip, and then look at this. Right? So, this 1999 talk is a bit crazy. You're hearing it from people, a lot of people who either forgot what 1999 was like, or they have no clue because they weren't even born yet. 1999, okay? Okay, 1999, you had a stock like this coming out every other day, okay? And then ripping for 3 straight months nonstop and splitting 4 for 1, and then ripping again and splitting again. Okay? That was 1999. That was 1999, my friends. 1999, you had names with no profits in sight that added .com at the end of their name, and the stock went bananas. Here, you can't even get a stock with the ideal ticker symbol It's an AI bubble, but you got AI making new lows every day. Back in 1999, I don't care if this was a PO box. They would have bought the living piss out of this just based off this ticker. That was 1999. All right? Or somebody mentioned this. This stock would be trading at $100 right now, minimum, in 1999. Minimum. Probably announcing a split. Minimum. That's not what's going on here. What you got going on here is you got, I don't know, how many are there? 6 names like this that have more money than God knows, that are chasing each other to get on top of each other, and spending all this money on AI, and the companies that they're giving this money to are benefiting from it in a big way. But meanwhile, these stocks, they can't get out of their own way. Look at this. This is an AI bubble. This is a 1999-like AI bubble. I'm sorry, I don't know what 1999 they're talking about. KTEL, what they sell, music? And they announced they were going to sell music on the internet, KTEL. And the stock, I can't even explain to you what it did. KTEL. Or pets.com. We sell pets. Now we're going to sell pets.com. Toys, e-toys. Went nuts. AOL, Yahoo, CMGI was just a company that invested in internet companies and then brought them public. That stock went from 10 to 800, split 5 for 1, went back to 500, split 4 for 1, went back to 300, and split again. I knew people who started with 100 shares of these .com names and ended up with 5,000 shares. And it was trading at $400. And they wrote it down to zero. Oh my God. And they wrote it down to zero. Because every pullback, if you sold, you felt like a jackass because you missed out on another $1 million. Yeah, it was not. I'm telling you, it was. Words don't even do it justice. Explaining it doesn't even do it justice if you didn't trade it in the late 90s. It was the most insane thing you'll ever see in your life. And now with algos and machines, and you know what that would be like right now if that ever turned out, if we ever had a 1999 here, you have no idea. No idea. And you didn't, options were, nobody traded options. You needed to be an accredited investor. You had to show $1 million in your bank account to get an okay to put an option order in. Options. If you wanted to buy CMGI, you were buying at $400 a share. If you were retail. I'm telling you, it was nuts. And what set it off was a 1998 correction that felt like a crash. So you had that in between. That gave birth to 99. It was nuts, guys. It was nuts. Again, I'm not saying there's not heat out there, right? Yeah, you got names that have gone up a lot. But so quick. People are, oh, it's here 1999 all over again. Give me a fucking break. Come on. The IPOs, the splits, where are they? We had one IPO today that everybody's ranting and raving about. Yeah, that's the other thing. We don't even get pullbacks here. This is just like slow grind up. The 90s used to get crashes every 3 months, flash crashes. That's what it felt like. And that's what set up 2000. That's why why you ever wonder why? How can you hold to zero? Why would investors hold to zero after making all that money? Because every 3 months, every correction, if you got shaken out, you got trolled. You were a sucker. No, like the big nose guy on X with the Bitcoin. You sold? Oh my God, what's wrong with you? How'd you sell? You fucking, what are you, nuts? Every correction, slingshot right back, boom, new highs, and then some. And then 3-4 months later, another flash crash correction. Then boom, new highs, another rip. So investors were trained. Whatever you do, don't get shaken out. Do not get shaken out. It's happened 15 times. If you sold any of those 15 pullbacks, you missed out on huge money. You got to buy that pullback. And then when 2000 came, you had another one of these sharp corrections. What they do, they bought it, right? They didn't sell it. You had a bounce. Everybody thought, here we go again, new highs. And then woof, south. And then people would just watch those stocks literally bleed out every day. And then as they bled out, other parts of the market that had nothing to do with tech and internet, they caught fire. But all these people got buried in tech. Yeah, he got one IPO today. People they're going nuts. Their heads are spinning. Oh my God, there's an IPO. What they priced it at? Oh, Jesus Christ. Again, I'm not saying that things don't get overheated. Yeah, stocks go up, they overshoot. Sometimes they overshoot on the downside. It happens, especially when there's a fundamental reason. Like you got, have you looked at the earnings revisions in chip names? Have you looked at their estimates? They have shot up like these stocks. Complete re-rating. So the market tries to price that in, and they overshoot. So I'm saying things go up a lot. Doesn't mean it's 1999. But that's the game now. You got social media. It's all clickbait and eyeballs and everything else. You got to be bearish to get, to get noticed. You gotta sound creative and different. Yeah, it's just, what I learned too, Matt, and I fall into this trap a lot. We always look back. You always look back because it's one of those sayings, history doesn't repeat itself, but it often rhymes. That's a crock of shit. Things change. It's never the same. You know what I mean? Never. You didn't have algos. You didn't have break stoppages for halts if stocks went down a certain amount. Yeah, you're talking about, it's like the dinosaur age compared to now. So people, I do too, like to compare it to a year. Oh, it's like this. It's like this. Never like anything. May resemble it a little bit, but it's never the same. Yeah, inverted yield curve always leads to a recession, all this shit, right? Meanwhile, I'll leave it. That's a great point, Madden, because we didn't even talk about it. I'll just leave you all with this because I don't know if it's real, but if it is, Trump is buying stock with two hands, okay, while he's trying to spook us out with nuclear world war in the Middle East. Whatever fund that is buying stocks with three hands. And telling us to buy. And he's telling us to buy. I think he just said it the other day again, right? Didn't he say it like a day or two ago? I think it's a good time to buy. Good market at new eyes. Oh my God, crazy times, man. Crazy times. So while they're trying to scare the living shit out of us, these guys are buying like they got tomorrow's newspaper. Yeah, that's why I think, Madden, the more, the Trump factor, the more I think of it, like this rest of the market theme, it's hard for, like, something will have to show up. Like, because again, that's what you can't factor in, like COVID, right? Like COVID showed up the first go around. What are you going to do? There's nothing you can do about that. Now, granted, you had a flash crash, they threw in the kitchen sink, and you came right back, right? But aside from that, like, it's hard to envision the rest of this market, the more cyclical area of the market. That's why, like, I want to get long the Dow, because that's like Trump's baby. Talks about the Dow all the time. Like, all he wants to say, probably top 3 on his list when he's done, is the Dow hit 100,000. Right? If you asked them before your term's over, give me the top 3 you would love to see. I think either 1 or 2 would be Dow 100,000. Definitely 1 or 2. Over world peace, over anything else, Dow 100. He wants to be the Dow $100,000 man. That's what he wants. Right? Yeah, you're right. You're right. And that's why, like, I want to get long the Dow. I want to get long the industrials. Like, again, like similar I did with the small caps, I want to do the same thing with the Dow. And just, give it a leash. Give it a leash. Yeah. Again, it's just how you want to do it. Maybe spreading it out. You know what I mean? Like, you got the XLE, which is pure industrials, or, if you think you get the time, you could start with a UDOW. And, again, it's not like you have all in sentiment and positioning here. You got the opposite. You got the opposite. You got the opposite. Like, you can make the case that tech goes into some sort of digestive phase. Okay? As far-fetched as that looks right now, it looks impossible right now, right? There's a good possibility of it. Okay? Totally normal when you get a move like this and it ends up getting as crowded as it does. But, we just saw it, if you remember, right? We just seen it. Tech underperformed, and they were, the Dow and all them and the small caps outperformed. But, you can't make that case for any other part of the market right now. It's just tech. And then again, just like we were saying last year, then when that happens, tech goes into digestion, people get bearish tech, and then tech becomes a buy again. Easier said than done, obviously, but that's how it usually goes. Oh, so let me ask you guys, because you guys follow it more than I do. Is that stuff that came out earlier today? Is that legit? What is that? Honestly, Does anybody know the Trump buys? Yeah, I don't know, Sahil, if anybody really knows. Does anybody really know if that was made up or he really bought Now and SMCI and all those names? Madden, I don't see how it's even legal. You know, unless the government takes a stake in it. I don't see how the president can actually invest in a company. You know, if I'm president, right, I can buy whatever. I can buy Microsoft, and then I can give a government contract to Microsoft. He's allowed 100%. I don't get it. That's it. I don't. That doesn't make sense to me. It doesn't make sense to me how the president's allowed to do that. So what's going to happen? Like, is it feasible the president, like the market's going to crash and the president gets buried alive in stocks? I mean, let me tell you something. The money that he comes out of these 4 years with, forget it. You know, that's a good point. You know, who that's what I'm saying. Like, who enforces anything anyway? You know? Like, who's gonna, even if he couldn't, who's gonna do anything about it? I told you, I said it earlier. His family better hope he survive. He doesn't drop dead, right? Because he's gonna pardon everybody, and they all leave unscathed. If he happens to get whacked or something, his family's dead. Buying the helmet ass later, yeah. That's insane, Sahil. That's insane. You know, we never seen anything like it before, you know? You know, prior presidents, they used to get asked about the stock market. Like, oh, you know, the market's down. What do you have anything to say? No, I don't comment on the market. A president would never talk about the market ever. I remember Obama caught so much heat when in 2008, he probably said this. He was like, it's probably a good time to invest. And they crucified him for that. They crucified him for that. You got Trump. You got Trump tweeting out tickers. Oh, man. Fun times, huh? You got to love it. Listen, love him or hate him, you're going to miss him when he's gone. You're going to miss him when he's gone. You're going to look back. You're going to tell your grandkids, you know, I was trading stocks when Trump was president. Boy, do I have stories to tell you. Come sit on Papa's lap. Come sit on Pop-Pop's lap. Crazy times, man. Yeah, I know. And that's the other point, right? Like, you probably had all this stuff going on, just nobody really knew about it. Pelosi was doing her shit, right? And then it all came out recently. The Fed, they during COVID, they got into all cash and then went back into investments into the lows when they printed QE. So they're all connivers. Yeah, well, it had to become a casino. That's what the people wanted. The people wanted a casino. You got to understand, retail, once retail gets in a big way like they did, they're not interested in investing. They want a casino. They want DraftKings. They want the other poly market. You know, if they take a piss, they want to bet on how much lands in the bowl. They want to bet on everything. This is the generation of degeneracy. Yeah, exactly. You know, the public didn't want the Warren Buffett long term invest over the years. They had no interest in it. They had no interest in the market. There was no interest. The Generation X. Well said. That's the term. The Generation X. From OnlyFans to Polymarket. From jarred farts to levered ETFs. We do it all. Oh, God. All right, my friends. I'll let you go. Enjoy the rest of your Thursday evening. All right. So we kind of have a little bit of a playbook to what to look for over the next couple of weeks. And again, hopefully the flow continues to be active and we'll have a lot of fun along the way. Yep. Have a good weekend. Everybody not in the Steam Room. I'll see you guys next week again. And Steam Room members, I'll see you mañana. Later, everybody.